Welcome to GK's Education. In the previous video, we have done a receipt and payment account for not-for-profit organizations. In the previous video, we have discussed that not-for-profit organization, they make receipt and payment account, income and expenditure account, and balance sheet. Here we discussed receipt and payment account in detail, and here in this video we are going to discuss income and expenditure account and balance sheet of not for profit organization. Here we are taking the complete pro forma of basic income and expenditure account. Income and expenditure account is of nominal nature. That means debit all expenses and losses and credit all incomes and gains. And we are having the basic pro forma of general expenses which we debit or credit the incomes. Main things are the salary and wages. Point to be noted is that we only enter all the incomes and expenses which are related to a given particular period. Here, all the advances are deducted, or all the previous year expenses or incomes are to be deducted. All the future or coming years incomes to be deducted also. Only the expenses or incomes related to the particular given period are entered here. So first week we mainly enter the accounts are salary and wages, repairs, expenses paid for the particular show, like as we have done that not for profit organizations, they run they are usually charitable institutions, so they can organize some shows to raise the funds for to the expenses for these funds. For these shows will be charged here. Entertainment expenses, honorarium. Honorarium is the amount paid to the guests who are invited on our shows. Printing and stationery, newspaper and periodicals, postage, upkeep of lawns, as explained earlier. If it is a sports club, then the lawns or the parks will be the upkeeping of them, the cost will be charged as expense. Rent, municipal taxes, insurance expenses, loss on sale of a fixed asset. Otherwise, fixed assets are we can say they are the expenses of capital nature, but in the year in which they are sold, if the value if the we can say the proceedings are less as compared to the book value left in the books, so the loss will be charged here in that particular year. And then depreciation on fixed assets, audit fees, all other miscellaneous expenses. On the credit or the income side, we have subscriptions. Subscriptions, point to be noted, we will add the subscriptions receivable for this year and will subtract any subscription received for the coming year or the previous year. Only the subscriptions related to this particular year will be shown here. Grants received, entrance fees, interest on deposits, general donations, dividends, collection from special shows, locker rent, profit on sale of fixed assets, receipts on sale of old newspapers, books, etc. Miscellaneous income. So if the income side exceeds over the expenditure, we will have surplus, and if the expenditure side exceeds over the income side, we will have deficit. Surplus will be added to the capital fund in the balance sheet, and deficit will be deducted from the capital fund in the balance sheet. Now, this is a complete basic pro forma of entries which appear in income and expenditure account. It is basically same as profit and loss account we prepare in trading concerns. Now, let us see the basic pro forma of a balance sheet. Here it is, balance sheet as on the particular date. On liability side, first item that appears is capital fund. We will have opening balance, we add surplus and deduct deficit. So the remaining balance will be there. Then comes life membership fee. Some members, when they join our club or association, they you can say they don't pay the fees year by year or as the time prescribed, but they make a lump sum payment which is required to be capitalized. So life membership fees, to the extent it is capitalized, that means like if there is a provision that we shall write off a particular amount every year, so the amount to be capitalized will be entered here, and the amount of life membership fees which is chargeable for a particular year will be entered on the income side of income and expenditure. Then similarly, the capitalized value of donations, grants, subscriptions for special purposes, legacy, endowment fund, and entrance fees. All the capitalized value of these things will be entered on the liability side. The third item we can say to appear is special funds. Like we can create a fund for flood victims, we can create special fund for matches, all. For special funds, balance of the previous year, we shall add the amount received in a current year and subtract the expenses paid out of that particular fund. Only balance will appear, net figure will appear in the balance sheet, liability side. Then bank overdraft will be here. Incomes received in advance, outstanding expenses, and creditors on the liability side. Then comes the assets, fixed assets, as balance as of previous year plus purchases during the year minus book value of the assets sold if there are any, and minus depreciation. The remaining figure will appear here. Then second amount will be the stock of consumable materials, like we can have if we are running a canteen, so we will have some consumable materials as balance on the closing previous year, which will be our opening balance. So that balance of previous year closing or opening of this year will be here, plus purchasing during the year minus value of consumption. So the remaining balance will be appearing here. Next is accrued or outstanding income. Like if we are having subscriptions, so subscriptions the subscriptions which we will be receiving for the coming years will appear here. Prepaid expenses, the expenses which you have paid in advance for the coming years, the investments, and at last cash at bank, current account balance, fixed deposits, saving bank account, and at last cash in hand will appear here. So it is the basic pro forma of a balance sheet. Let us clear more about these things by taking an example of a question. Here we are having a receipt and payment account of Gagan Social Club, and some entries are also given, some adjustments are given. So let us see how we can solve this question. We are having on the receipt sides the balance, subscription, profit on dance show, receipts from matches, competition fees, refreshment sale. And on the payment side, we are having payment for prizes, game equipment, rent, rates, printing, stationery, postage, secretary expenses, repairs, wages, refreshment, and balance brought down. Then we are having the capital fund opening balance 42,000. Opening balance of furniture is 15,000. Games and equipments is 20,000, and we have to depreciate both the assets at the rate of 10%. The amounts outstanding on closing date: printing expense outstanding is 400, and for refreshment is 700. Amount paid in advance, rent paid in advance is 1500. Then subscription due is 1200 and subscription in advance is 500. We will prepare income and expenditure account. We will prepare the income and expenditure account and balance sheet side by side. Like we were having prices, payment side. So it will appear prices on the debit side of income and expenditure account. Then we will have rent 10,500. We were having rent 10,500, but the adjustment was given regarding rent paid in advance to the extent 1500. So that 1500 will be deducted. 9,000 is only related to this year. Then we are having our expense rates appearing here as it is. Printing 1600. Printing 1600. The adjustment is of printing expense 400 outstanding. So we will be adding this. It comes out to be 2000. Then having stationery expense 2200. Then having postage 1900. Then secretary expenses 1400. Repairs of equipment 2700. Then wages 12,000. Then refreshment wages, after that it is refreshment. We are having 5100 expense plus outstanding as given in the adjustment is 700, so it comes out to be 5800 for this year. Then depreciation of equipment is 2200. How depreciation of equipment? We had 20,000 in the yes, we had 20,000 as the opening balance. During the year we purchased 2,000, so 20 plus 2 22,000, and charged 10% depreciation, so it comes out to be 2200. And then furniture we were having opening balance of 15,000, so charge 10% depreciation, which comes out to be 1500. Now going to the income side, we were having receipts of subscriptions 24,000, so 24,000 plus outstanding subscriptions or subscriptions due 1200, so we enter here. And then subscription advance, like this, subscription in advance 500, deduct it, and it comes out to be 24,700. Next item appearing is that is profit on dance show. It will appear as income. Then receipts from matches, it is here again as income. Then competition fees treated as income. Refreshment sale 8200, it is also an income, so the surplus comes out to be 6100. Capital fund come out to the balance sheet. The capital fund opening balance was given 42,000, so it is here Adding surplus, it comes out to be 48,100. And then outstanding printing expenses are liability, refreshment outstanding expenses again are liability, and subscription received in advance again are liability. Cash, we took it from the receipt and payment account closing balance. It is 13,700. Furniture, 15,000 opening balance, depreciation 1,500, and it comes out to be 13,500. Then games and equipments, 22,000, plus purchases during the year, 2,000, minus depreciation 10%, so it comes out to be 19,800. Subscription receivable, 1,200 are asset. Then rent paid in advance, 1,500 again are asset. So it will be 49,500 balance on both the sides. This is how we make receipt and payment account, and then income and expenditure account and balance sheet in the case of not for profit organizations. There are few other terms particularly used in this chapter which I'll be explaining in the next video. I hope you have liked it. Thank you.